All right, welcome back to the deep dive, everybody. Ready for another deep dive? Today, we're going to be talking about crypto predictions.
Oh, I know.
Buckle up because we're going to be talking about a theory that suggests that some market upswings, maybe they're not entirely organic.
Ooh, sounds a little juicy. Are you talking about market manipulation? It's something that always gets people talking, especially in crypto.
Exactly. It's like trying to figure out there's a puppet master,
Mhm.
someone behind the scenes pulling all the strings of the market.
Oh, I like that.
So let's talk about this idea of a predetermined pattern for manipulation. Um, are you familiar with the walk-off reaccumulation schematic?
Wake off, yes. Definitely heard that name floating around in the crypto space.
Yeah.
It goes back a while. It's a theory from way back in the 1930s, developed by a trader, a guy who saw some interesting price movements in the stock market. And basically what it suggests is that big players, or whales as we call them now, could manipulate prices through buying and selling actions, a whole series of them.
Okay, so walk me through this. How would that even work? It sounds a little bit like a Wall Street conspiracy theory.
Well, so the theory goes that these big players would first drive the price down, make everyone panic and sell, and then they accumulate more of the asset at a much lower price.
Ooh, sneaky.
Yeah, right. And then they would slowly start buying again, creating a sense of upward momentum to attract all these new investors. As more people jump on board, the price starts to go up, and then eventually those big players can just sell off their holdings at a profit, leaving everyone else, well, holding the bag.
Whoa. So that's kind of a brilliant strategy. It's a little sneaky. But how reliable is this whack-off pattern? Could someone actually use it to predict the market, especially a market as wild as crypto?
Well, that is the million-dollar question, isn't it? Wyckoff observed all these patterns in traditional markets. Applying those to crypto is way more complicated. I mean, crypto is new and it's so much more decentralized than the stock market. Plus, you have a whole lot more emotion-driving decisions in the crypto space, so it's so much harder to predict what people are going to do.
So you're saying it's not as easy as spotting a few patterns on a chart and assuming someone's pulling the strings.
That's right. I mean, you always have to remember, correlation doesn't equal causation. Just because a price chart looks like a Wyckoff pattern, it doesn't automatically mean it's being manipulated. It could just be, natural market movement.
That makes a lot of sense. So if the Wyckoff pattern isn't like a crystal ball, what other things should we consider when we're trying to make sense of these movements in the crypto market? Like what about the impact of news and big events?
Oh, absolutely. I mean, those can send huge shockwaves through the market. Remember when a certain country decided to ban crypto entirely? Prices just plummeted almost instantly. And the opposite can happen too. Like when a major company decides to accept Bitcoin as payment, then suddenly everybody wants in on the action and, well, the price goes through the roof.
Right, and that makes me think about the fear and greed index, It tries to measure the mood of the market, and I
Mm-hmm.
imagine news and events have a big influence on that.
Oh, absolutely. When fear takes over, people tend to sell, driving prices down. And when greed takes over, well, we see buying frenzies. It's all about understanding the psychology of the market, gauging the collective mood.
It sounds like understanding that psychology of the market is just as important as being able to, read those charts.
It really is. You got to factor in the human element, all the hopes and fears, the herd mentality that can really drive those prices up or down in an instant. It's what makes crypto so fascinating, but also so incredibly volatile.
Okay, so we've got the wake-off patterns, news events, and the crazy emotional side of things to think about. But what about the big picture economic factors? I keep hearing people talk about M2, the global money supply, and how it affects the crypto market. What's the connection there?
Well, M2 is basically a measure of all the money floating around in an economy, currency, savings, checking accounts, that kind of thing. It tells you how much liquidity is really out there. And the relationship between global M2 and crypto is definitely complicated, a lot of debate around it. Some people think when M2 increases, it means more money is flowing into riskier assets, including crypto.
So if a government, let's say China, decides to pump a ton of money into their economy, could that actually set off a crypto bull run?
Well, it's tempting to just draw a straight line between the two, but it's not always that simple. Remember correlation. Increased liquidity could mean more speculative investment in crypto, but there are always so many other things happening at the same time. You got to consider things like new tech, new regulations, investor sentiment. It's all connected.
Okay, so let's break down some of those other factors a little bit. Let's start with the technology side of things. I keep hearing about DeFi, decentralized finance. Everyone says it's revolutionizing finance. What does all that mean for the crypto market?
DeFi is a game changer, I'll tell you that. It's about taking those traditional financial services, lending, borrowing, trading, and putting them all on the blockchain. It cuts out the middleman, like banks. That shift puts the power back in the hands of individuals, giving them more control, and it has the potential to disrupt, well, the whole financial system as we know it.
Wow, that's huge. So if DeFi keeps growing, that could be a really big driver for growth in the entire crypto market.
Absolutely, yeah. The more people use these platforms, the greater the demand for crypto, which in theory should drive prices up. But of course, it's not a guarantee. You also have to look at regulations, which are always changing, always impacting the crypto world.
Right, because governments are still trying to figure out this whole crypto thing, right? Some countries are embracing it, some are cracking down. How does all that uncertainty affect the market?
Oh, it's a huge factor. Clear regulations can give investors confidence and attract institutional money, which is key for long-term stability, long-term growth.
Hmm.
But overly restrictive regulations can, stifle innovation, drive these projects underground.
It's like they need to find the balance between protecting people and letting innovation happen.
Exactly. And it's not just about the governments either. We have to look at those really influential figures in the crypto community itself. We've seen how a single tweet from a big developer or a big investor can send prices soaring or plummeting.
It's true. And let's be honest, a well-placed tweet, a good endorsement, or a bad criticism from a crypto influencer, that can create a real frenzy, especially for newer investors, the ones who might be a little more prone to hype and FOMO, the fear of missing out.
Oh, absolutely. Social media just amplifies everything in crypto. So how do we sift through all that noise and make sense of it all? How much weight should we really be giving to all those pronouncements? That's actually something we can explore in the next part of our deep dive.
Okay, so we're back and ready to jump back into this deep dive on crypto predictions. But before the break, we were talking about these big names in crypto. The developers, the investors, those folks with millions of followers hanging on their every word. It seems like they have the power to really move markets with just a few words.
It's true, yeah. Their words can carry a lot of weight, especially in a market like crypto, driven by sentiment and, buzz. But how much of that is actually real influence and how much is just hype? That's the real question.
Yeah, that's what I keep thinking about. I've seen coins pump like crazy just because some influencer tweets about it, but then a few days later, it all comes crashing down. So how do we know what to pay attention to? How do we cut through the noise and figure out which of those pronouncements are actually meaningful and which ones are just hype?
That's where you need some critical thinking. You have to
Definitely.
look beyond those headlines and all the hype and really look at the substance. What are they actually saying? Look at their track record. Have they made good predictions before? Do they really know what they're talking about? Are they knowledgeable about the project? Those are the questions to ask.
So it's like doing your due diligence, not just on the project itself, but on the person who's talking about it. You can't just blindly trust everything you see on Twitter, right?
Exactly. You got it. Don't be a blind follower. Be an informed investor. Do your own research. Come up with your own way of evaluating the information out there. Don't just take someone's word for it, even if they're super influential.
Okay, that makes sense. But even if we ignore the hype, it's hard to ignore how much these influencers can impact the market just through psychology, right?
Yes.
And they can create so much FOMO, that fear of missing out, and it pushes people to make really impulsive decisions.
Oh, yeah, for sure. FOMO is huge in the crypto world. And these influencers, they know how to play on that, right? They paint a picture of these massive gains, life-changing wealth, and it's easy to get swept up in all that excitement.
It really is like a gold rush. Everybody rushing in, hoping to get rich quick before it's too late.
That's a perfect analogy. And just like a gold rush, there are going to be people who win big, but there are going to be a lot of people who lose everything.
So how do you avoid that frenzy, How do you keep a level head and make smart decisions when everyone around you is losing their minds?
Well, it's definitely not easy. But the thing to remember is that real success in crypto, or in any market really, isn't about chasing those quick gains or following the hype. It's about having a good strategy, a strategy based on research and understanding. And a long-term perspective is key.
Okay, so let's talk about that long-term perspective for a minute. If we zoom out, if we look past all the daily ups and downs and all that influencer noise, what are some of those key indicators that can help us understand where the market is actually headed? What should we be paying attention to?
There are a few things to keep in mind. First, the development of new tech and new applications is always going to be important. We talked about DeFi earlier, and that's just one example of how crypto is changing things, pushing the boundaries.
Right, DeFi is like a whole new financial ecosystem, yeah. But what about other applications beyond just finance? Like what about NFTs? Those digital collectibles have become so popular recently.
NFTs are interesting for sure. They show how powerful blockchain technology can be, being able to establish ownership and create scarcity in the digital world. Whether it's digital art or music or even virtual real estate, NFTs are creating all sorts of new opportunities.
So it's not just about speculation, right?
Yeah.
It's not just about making money. Crypto is actually driving real innovation and creativity in a lot of different areas.
You got it. Exactly. That's what makes this whole space so exciting. It's not just about numbers on a screen, it's about how it can actually transform the way we interact with the world, with each other. It has a lot of potential.
Yeah, it's a really powerful thought. But I imagine with any new technology, with anything this disruptive, there are going to be some bumps in the road, right?
Definitely, of course. Regulation is a huge one. We've talked about that. We need governments to provide some clear guidelines, some frameworks that encourage innovation, but also protect people. And we need to address those scalability issues, make sure the blockchain networks are secure, and just keep educating the public about how all this works. There's still a lot of confusion out there.
It sounds like a lot to tackle.
Mhm.
It seems like the future of crypto really depends on finding that balance,
Hmm.
between encouraging innovation, making sure there are good regulations, and getting people to actually use it.
Yeah, you hit the nail on the head. And it's going to be really fascinating to see how it all plays out. These next few years are going to be really important for determining whether crypto becomes mainstream or if it just fades away.
So are you optimistic? Do you think crypto really has the power to change the world?
I'm cautiously optimistic, I'd say. I really believe in the technology. It's incredibly transformative, and the potential applications are really limitless. But we're still early, and there are definitely challenges to overcome. It's going to take some time, some patience, and a lot of hard work from everyone involved.
So we've got this really interesting mix, right? We have innovation, we have regulation, we have all this speculation and hype. It's definitely a wild ride, that's for sure. But as we wrap up this part of our deep dive, what's the one thing you want our listeners to take away from this conversation? What should they be focusing on as they navigate this whole crazy world?
The key thing is to stay informed, keep thinking critically, and don't get caught up in the hype. Do your own research, come up with your own plan, your own strategy, and never forget that crypto is still risky. You can make a lot of money, but you can also lose a lot.
That's great advice. We'll be right back after a quick break to explore some final thoughts and some more strategies for navigating the crypto world. All right, we're back, ready to wrap up our crypto predictions deep dive. It's been a wild ride. We've talked about everything like market manipulation theories, the ups and downs of market psychology, the whole DeFi and NFT craze. Phew.
It really has been a journey, hasn't it? Lots to cover. And as we sort of reach the peak of our crypto mountain, it's time to think about what we've learned, right? And figure out how to navigate this crazy world.
I love that, the crypto mountain. So any essential tips for our listeners, those brave souls venturing into this uncharted territory? What should they keep in mind?
Well, I always say knowledge is power, right? The more you understand about the tech, about blockchain, about the different kinds of crypto out there, the better decisions you're going to make. You got to know what's driving the market.
So it's not enough to just kind of watch from the sidelines. You got to become like a crypto expert.
Right, exactly. Dive in. Read those white papers, learn from the experts, have those conversations, get involved in the community. The more you know, the harder it is to get tricked by the hype, the manipulation, all that.
That's great advice. But even if you know everything, it's still a pretty risky market, isn't it? How do you manage that risk? Any tips for not making, well, costly mistakes?
Well, risk management is key for sure. The golden rule, no matter what you're investing in, is never invest more than you can afford to lose. That's especially important in crypto because, well, it's so volatile, things change fast.
So no betting the house on Dogecoin, no matter how cute that dog is.
Haha, exactly. And diversify. Always diversify. Don't put all your eggs in one basket. Spread your investments out, look at different cryptocurrencies, and maybe even think about putting some of your money in more stable things, like stocks or bonds. Helps to balance things out. And, if one investment goes bad, it's not the end of the world.
It's like building a balanced portfolio, just like with any other investment strategy. Makes sense.
Exactly. And always keep in mind, crypto is still a young market. It's going to have its ups and downs. Don't get discouraged when there's a dip. It's a chance to learn, adjust your strategy, Maybe even buy into projects you believe in at a lower price.
It's all about the long game, right?
Yeah,
It's not about getting rich quick. It's about being in it for the long haul, riding out the storm, and being part of something that's, well, really groundbreaking.
couldn't have said it better myself. It's about being part of something bigger, a movement that can actually make a difference.
So that brings us to the big question. What does the future hold for crypto? Is it going to become mainstream, or is it just a fad that'll fade away?
Oh, the million-dollar question. Nobody can predict the
Yeah.
future, right? But if you look at what's happening, more people are using crypto. There's so much innovation happening. It's hard not to be at least a little optimistic.
So it's more than just an investment then. It's like a technology that could actually change the world.
Absolutely. It's about shifting power, giving people more control over their money, their information. It's about transparency, fairness, building a future where technology actually works for us, not the other way around.
It's a pretty inspiring idea.
Yeah.
And it seems like we're just getting started, right? Who knows what amazing things will happen in the next few years.
That's the exciting part. Crypto is always changing, always pushing the limits. It's a wild ride, but it's full of possibilities.
Well, that about wraps up our deep dive into crypto predictions. Thanks to everyone for listening and for joining us on this exploration of the crypto world. We hope you learned something and that you feel ready to dive in, with a little more confidence.
Remember, the future of crypto is happening now, and you can be part of it. Stay curious, stay informed, and get involved.
And if you liked today's episode, give it a like, leave us a comment, and tell your friends about it. Let's keep this conversation going. Let's keep diving deeper together.